Hello, ladies and gentlemen. Welcome to another episode of Smart Money Concepts. It has been a while since I created one, so I felt like I would go over just a few pairs to kind of recap what smart money is all about and all the intricate details of this great strategy that proves time and time again to be so profitable. This is exactly how we trade. I'm going to go over step by step the way I look at the markets, and hopefully it provides a lot of value to you. So I want to first start off with AUD NZD. AUD NZD and all of these trades have been sent out to either one of our groups, either our VIP community, our free channel, or our Wyckoff channel that we have. This has to do with Wyckoff and a little bit of smart money as well, with some supply and demand zones. So really every single facet of our trading strategy is going to be described within these pairs. I picked the best pairs to go over, the ones that look the most clear, to give you guys the best picture of how we trade. So this is AUD NZD. As you can see, this is exactly what was sent out to our Wyckoff channel here. Right there. Or excuse me, where is it? There it is, Wyckoff channel, perfect. So this has about 500 members in it. You are free to join. This is a free channel. Please feel free to message me for the link. We send out a lot of analysis throughout the week of what we see. This was just one of them. And as we can see here, this was the accumulation of AUD NZD, and this was the free trade that was sent out. And as we can see back in here, this is exactly what happened. All right, so we are very transparent with the way that we send out trades, send out free stuff, send out analysis, and updates within these analysis trades. So let's start off with AUD NZD and what's going on. All right, so let's go to the higher time frames and look what we're doing. Well, obviously we are in a massive downtrend. As we can see, lower low, lower high. This is a 4-hour time frame, or you can go to the daily time frame. It'll show the same thing. All right, so we finally made a lower low. Okay, price is starting to accumulate. We had a big expansionary move. Now, many people would ask, well, why are you looking to buy this if we're in a downtrend? Well, that is a very good question. And most people would be right. You are supposed to be looking for sells. However, when we get back down into these swing points after a huge, impulsive moves, you can look for reversal type setups if you're getting confluence. And that's exactly what we're having here with accumulation. Same thing goes with distribution. If you have a distribution schematic like you have in here and in here, you can be looking for selling opportunities even if you're in a buyer's market in here, right? But overall, yes, you should be going with the trend. Should we be looking for sells? Yes, and any single pullback, which this is exactly what it is, a impulsive move to the downside, a pullback, a potential impulsive move back to the downside. Obviously, we had a reversal here with this, but not to say this can't go short over the long run. This could be as simple as 1 push, 2 push, pullback, 3 push as an overall retracement to the downside again. All right, so obviously, yes, higher time frame we should be looking to sell. So we can be looking at these supply and demand zones on higher time frames to be looking for reversal patterns. But after this huge impulsive move breaking counter trend structure, even though it is counter trend, I would still be looking for potential buys when we got back down to this accumulation zone. So I want to go down to the 3-hour time frame and look at this accumulation. All right, so now we scale in. And again, this was all set up within our Wyckoff group. We do send trades to our VIP community as well, mostly to our VIP, but on occasion we would send them to a Wyckoff or the free channel group as well. So let's go down to 3-hour time frame, AUD NZD. Obviously, we are starting to slow down in price. All right, we're having, our push, second push, third push, break of structure, okay, test of the last point of demand, and then we rise again, make a higher high. So you can see the trend is starting to shift. So this is what we call accumulation. We have a whole course on Wyckoff, accumulation, distribution, all the phases in Wyckoff, how to identify them and how to trade them specifically. So we go step by step into all of our courses, just as kind of what I'm doing here in these free videos. So identifying accumulation here and the expansionary move that followed, we can then move our eyes back down to this accumulation zone to look for buys. Okay, now we have our counter trend move here. Lower low, lower high, lower low, lower high. Why did I pinpoint this exact level, 1.03274? Well, this was the exact point in which we had our first start of the expansionary move after the test, after the spring. Okay, so we sprung, we tested, took liquidity, pushed up very, very strongly. So this is the point in the market that has imbalance, inefficiency. Okay, we can see our last point of demand right in here. Okay, and then with the inefficiency, you could have gone 50% of that inefficiency or the actual full fill. All right, and we got that full fill here at 1.03274. That's where exactly we placed our entries. That was based off of our free trade idea that we sent out. We have 2 entries right here. One was a little bit lower, but one we got in. So it is really great to have multiple entries when it comes down to your trading strategies, because nothing is ever going to be very, very 100% perfect in the market, right? So we have multiple entry points, inefficiencies at maybe sell to buy candles. So gives us the best opportunity to get into the market. So that's exactly what we did. We missed it just by a few pips, created that lower high, and then that lower low. We finally ran that liquidity again, created this lower time frame accumulation, which I'll go into, which is really great confluence. When you get accumulation or distribution within your areas of interest. So obviously this blue line, we just talked about the inefficiency fill with the prior accumulation. We can see that we're starting to accumulate, and I'll even go to the lower time frame, 15-minute. We're starting to accumulate again here at that exact spot. And this is a perfect Wyckoff accumulation schematic. Selling climax, secondary test, spring, break of structure, higher high, liquidity run here, right down into this block. Yes, you can consider this probably a run on liquidity, but it was, I think, Sunday open. So really we closed here. It gapped. So if this was not Sunday open, it probably would have stopped here and made a move to the upside. So I don't really consider this take a grab of liquidity. So this is our new block. We came into this level here, and then we made a higher high from that. So this is a perfect accumulation schematic. I'll just get rid of all this now. Now let me zoom back out. So you could have had an entry right there, right? And you could have found lower time frame entries upon this accumulation schematic within the accumulation schematic here after the impulsive move. So you guys kind of see how I'm looking at the markets here, always looking at structure first. So higher time frame structure, then lower time frame structure. So obviously higher time frame structure is bearish, lower time frame structure is bullish in terms of the break of structure in here, or even here, because this is a lower low, lower high, lower low, lower high, lower low, accumulation, break of the structure, looking to pull back and go long. Okay, that's what we talk about in our courses with counter trend breaks versus real trend moves. There's a difference. So how do we know that this is going to be a counter trend break instead of just a pullback to go short? Well, we have clues in here with this accumulation. And again, when we come back down into this level, we have more accumulation. In addition, not only could you have probably gotten a lower time frame entry here, what's a huge confluence that we see that confirmed long opportunities? Right here. Lower low, lower high, lower low, lower high, lower low, into accumulation, reaccumulated here, push up, break structure, higher high. We shifted trend. We broke the structure. We closed above it. Now we're looking for the pullback to go long, and that's exactly what we did. Okay, so this is really just simple stuff, guys. Really, really simple. You don't have to force any trades. Why not just take the trades that have all of these confluences with it? Okay, let's just go ahead and see what risk reward we would have gotten. So place stop below here. You could have placed stop probably below this demand zone here, but just to be safe, we'll do the whole block in here. So let's go 46 pips, 46 pips, all right? And now we would have taken it. This is where we would have taken it. You could have pulled a fib from here to here. Negative 27 could have been your first target. Negative 61, which is also the relative high of this high here. That could have been a 5.7 risk to reward. You could have also went like this, since we did have accumulation here. Retracement, impulsive move. Negative 27 lines up with sort of supply that's coming about in here, which is an overall retracement of this move here. A good 1 to 7.5. 7.5%. If you guys just wait for these type of setups, you're going to be getting these on a consistent basis. Okay. So that's, let's just say 7.5%. Obviously, it's not there yet. I do expect some sort of retracement before a continuation again. But just simple concepts, guys. Let this stuff come to you. It's really not that difficult when you just train your eye to see these things. It's step by step. It's not something that is always going to be different. Obviously, the markets are different, but it's the same concept every single time, which allows you to identify these specific things. Have a list of rules. Have a list of confluences that you use. I have a whole list of rules and confluences that I send out to all my VIP members that take advantage of these trades all the time. They come to realize that certain confluences are better over others. Retail confluences are not appropriate whatsoever in trading. They always end up losing. Go towards the institutional side, understanding where volume is being placed, order flow, and all those stuff, mitigations of specific blocks in the market. All these confluences are very, very key. And guess what? Not only did we win this trade, we had almost a sniper entry. You can call them sniper entries, wick entries, whatever, but very, very little drawdown here whatsoever. So that was AUD NZD. Hope you guys took some value from that. Rewatch that and rewatch it over and over again to get more of an idea of what I mean by all these things. We go further in depth in our courses as well. Next pair, USD Chef. All right, I have all of these marked up to begin with, so I don't have to go back and find the exact places. It would take too long on this video. So first, I'm going to go to the higher time frames here. What are we doing? Again, top-down analysis. What are we doing? It's simple. Higher high, higher low, looking at another higher high. We're in a bullish market. Okay, identified. Perfect. Now, lower time frames. Lower time frames, we're also in a bullish market. Higher high, higher low, higher high, higher low, higher high, right? So we're seeing the trend on a lower time frame now. Now, our trade was taken in here, okay, off of this level prior to making this higher high, or excuse me, after this higher high was formed. So now we have to figure out, okay, what were all the confluences in here that led up to this being an appropriate place to take an entry? Well, we can see here, higher high, higher low, higher high again, equal lows were formed. So now our eyes go back to this block in here. When a higher high is formed, you always go back to the lowest point of return, or last point of return in the market. The last point a price can retrace in order for it to then be a good idea to start buying with the lowest risk possible with the most return. Okay, so we can see in here, this is the last point of return, this block, this sell to buy candle that took liquidity that finally made that higher high, which eventually led to the higher high, was already mitigated within these candles. So now we look at the imbalances. Okay, the imbalance, this is a huge impulsive move with no retracement. We never got the full inefficiency fill at 0.90863. We had equal lows that were made before that. I talk about this time and time again in my videos. Equal lows and equal highs are usually always made before the run on liquidity that comes into a higher time frame block, right? So again, leaving clues, equal lows, higher highs formed, we're most likely going to have a retracement that takes out these equal lows that comes into the block that was originally designed to be hit and mitigated anyways. So again, the inefficiency fill, guess exactly what we did. Came into it to the T. Okay? Then, guess what happened? This is just beautiful, guys. Lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. Now we look for clues. You could have entered right there, right? You would have had a bigger stop loss. So how do we lower our stop loss when it comes to doing stuff like this? Well, look for the counter trend break. We got our inefficiency fill. Guess what happened next? We closed above this level, higher high, or formed relatively equal highs, aka liquidity to be taken. All right, now let me get rid of all these markups. Perfect. Now let's go into bar replay here. Let's go down to the 1 hour time frame. So now that we have these relatively equal highs, or the run on the high, now we look at the last point of return order region here, our last selling volume before the big rise after that inefficiency fill was placed. We have ascending liquidity to be taken before the higher high was formed, or will eventually form. But we can see here, this is the block that we're looking to come into. All right, now you will say, well, this price came into this block. Well, yes, but we never made a higher high first. Always wait for that higher high to be formed. After that, then look at the block. you'll more than likely take out the low that came into the block originally and come further into this order region before making a higher high. It's exactly what we had. We had ascending liquidity, right? We had this counter trend, lower low, lower high, lower low, lower high, lower low. Finally made that higher high. Guess what we did? We came into this block here and formed this block right there. Last sell to buy. No wicks on either of these candles here, which signifies a take of liquidity coming into this region. And guess what, guys? Subsequently, how did we know that this was going to form? Well, we took the low, came into the block after the higher high was formed, sell to buy. Even in here, I knew, okay, we're probably going to now counter trend break this. It's exactly what we did right there. Broke that. So now where do we look? Right here. Last point of return. Okay. So it's just the same process over and over and over. I'm going to zoom back out. So now that we understand that that's where we should be, we had that hour time frame sell to buy candle, right? You could have placed your entry right there. A great stop loss would have been right below the low of this candle. Or if you wanted to, be a little more conservative, just in case we did run out this low, which was very unlikely, but it could. We could still come lower into this. Not very likely because we made a higher high following. So really the stop loss should be right here. But if you wanted to place it right below the overall block, you could have for a little less of a risk to reward. But you could have placed both. This is the beauty of splitting up your lot size, splitting up your positions, and placing both just in case, it does come lower. If it comes lower than this, and you didn't place this entry or have this stop loss here, then you miss out on the entire trade. But if you simply, just placed it or placed your stop here without any stops here, then you're stuck with that risk to reward and not this risk to reward, which is a lot better. So let's scroll over. What do we do after this move? Higher high or relatively equal highs, liquidity. Right now, we start to pull back, lower low, lower high, lower low. Guess what we did? Perfect. We came into this level. Now, what are you guys going to ask? Okay, I missed this, right? How do I get into the market if I didn't know that it was going to react off this level, but two, if I miss it? Well, that's okay. You can always wait for the counter trend break. That's the beauty of it. Okay, so if you're not sure if this is the right level that it should react from, which it is, because we've had all the confluence before, wait for the counter trend break. This is great. This concept is amazing for people who are new to this. If you're new and didn't know to place your entry right here that has almost zero drawdown, then it's okay. Understanding that you can test these levels. What do I mean by test them? Let's just say that you think this is the right area to take a trade. Wait for it to come into it, wait for the reaction, wait for the counter trend break, and then find the block in which to play off the counter trend break. Okay, and I have all of this for you right here. Okay, so let's just say for some reason you didn't get in here. I got in here, but I also got in a second time, which allowed me to make more money because it confirmed it. Okay, let's go down to a lower time frame. 15-minute. Okay, so now again we're starting to slow down in price. You can even check divergence here. If price is falling and volume is rising, that's price divergence, volume divergence. You want to be looking for reversals. It's great to look for volume divergence when you're coming into areas of interest. Okay, selling climax, secondary test, lowest point, then we had our spring, right? And then we had our final test over here. So this is, again, accumulation. Different kind of accumulation, but it's accumulation. Guess what? Lower low, lower high, lower low, lower high, lower low, lower high, lower low, higher high. Overall area of interest is exactly what we just discussed way over there. If we didn't get this entry, we wait for the counter trend break, exactly what we got. Guess what? No wicks to either side. This was the last liquidity run before the higher high. This becomes our new best friend. Our eyes go straight here. Imbalance in here a little bit. Entered. Price starts to slow down even on a lower time frame. More of an accumulation and probably like the 5 minutes to 1 minute, which I'll actually just go into. Yep. Slow down. Accumulate. Go long. Okay. Entry right there or the 50%. You could have both entries for better risk to reward. I would have gone just the open here. Perfect entry. Almost zero drawdown. we're golden. Guess what? You had that huge pushback to the upside. Now you've confirmed it. Well, you've confirmed it here at this break of structure, but now we're forming higher highs, higher lows, higher high, higher low, higher high. Guess what? Next area of interest can go right there at that block there for a retest and a continuation. So not only could you have one entry there, two entries right there, but then another third entry right here. See what happens. Perfect. Chop, chop a little bit. Guess what? Overall continuation to the upside. Okay. So I'm going to move out of this. And that's exactly what we got. A little bit of drawdown here if you had have entered. But again, the higher high was then formed. Well, didn't take out this high. So technically not a higher high. But then we came all the way back down. Would have hit us out break even, but you still would have taken partials. For this trade, and this trade, a lot of percent to be made. And sometimes, it's not going to be so smooth. It's not going to be all the time you're going to get continuations, higher highs, higher lows. That's what you should expect because that's what the trend is telling you. But sometimes, if the price just totally reverses and comes back down, oh, well, at least you moved stops to break even. You secured partials. You got the bias right? And you got the setup right. You waited for confluence. So the trade was already in your hands down here. Who cares what happens up here? Who cares that it reversed? You're still making money because you used confluence in your rules to confirm these entries in the first place. Okay? So that is USD Chef. Hope you guys took value from that. Our last pair that I'm going to go over is NZD USD. So NZD USD, starting from a higher time frame, from a 4-hour time frame, we are in a bearish market. Higher time frame, we're in a bullish market, as we can see. Higher highs, potentially higher low, coming back down into these regions of price for maybe a potential higher high. But right here, lower time frame, lower low, lower high, lower low, lower high, lower low. Okay, next. There is no indication through this push to the downside that this was ever going to reverse and make an upwards move. Yeah, you could say, oh, it started to come into these order regions here, but it really hasn't. I mean, we have equal lows down here as well. I'm still looking for sells because this is the current trend since February of last year. So we've been in this for almost a year now. We're still bearish on this time frame. I'm still looking for sells. We are below the EMAs. We should continue to look for sells, right? How did I know it was going to reverse? I didn't. I'm just continuing to look for sells because it gave me no indication of any potential reversal. There's no schematic, there's no accumulation in here to tell me that it could potentially reverse. So I'm still looking for sells, looking for the last points of return on each swing point. Okay. Excuse the lag in my computer. I'm not sure why it's doing that. Okay. So let's continue. So I'm going to try to go quickly with this one because it is lagging. I'm not quite sure why. Anyways, let's scroll over here. We had our supply region here. Okay. So our lower low, our lower high, our lower low again. So this is where we should be looking for our sells. Continuations, lower low, lower high, lower low. Hopefully a lower high to make a lower low again. All right, so this is the exact region where we should be looking. Okay, the last buying pressure before the sell. We never got that mitigation here, here, or here. So all of these highs here should be taken out, right? You can also see this huge wick right in there. That wick, this candle that started to form that made this wick has imbalance right in there. So we could go these two levels, 1 and 2 for entries, okay? So that's exactly what we did. We forgot about all of these highs because we never got that mitigation into this level to begin with. All right, this was just a simple purge on liquidity. We came back up, had a wick entry, beautiful entry, had a massive push to the downside, created those equal lows. So in this case, obviously you would have put your stop loss to break even after a lower low was made or equal lows were formed just in case of a reversal of trend, an unexpected reversal. We did come into that, had a great reaction, zero drawdown whatsoever. Stops were a break even, partials taken. Now let's move over here. Now we still have this line, right? Remember the inefficiency fill from this wick? We still could come into that region and make a move to the downside. So even though this was moved that stops were moved to break even, yes, we got stopped at break even, but we still had this position at half risk because half risk here equals one full risk. That's how I like to break it up if I have multiple entries. So This was at break even. Now we have half risk here. Didn't quite hit it here. That's okay. We're still starting to recharge for another push back up to the upside. We have distribution in this region. So now we came into it, we hit it. The distribution was seen after the entry was already made. It ended up just confirming the trade for us. But nonetheless, we got in, had a little bit of drawdown, but that's okay. We started to distribute. Last buying point, okay? Buying climax, secondary test, our spring here, okay? That lower low was formed. Test did not come above these highs. This is our last test. And then we made our move to the downside with a lower low. This is the structure. Higher high, higher low, higher high, higher low, higher high, lower low. Okay, so once that lower low is formed, after the distribution, which even confirmed it more, after the mitigation and the imbalance fill from our prior supply zone that hadn't been mitigated, you see all the confluences here starting to build up. Now where do we go? Okay, right in here. This mitigated probably like a 1 second candle in here to create that test. Lower low, lower high, mitigated this mini supply, lower low, so much inefficiency right there. That's where my eyes go. Okay, so now we can get rid of this. Get rid of this line to make it more pretty. Okay, so where do we place our trade? Right in here. Okay, had a little bit of drawdown when we came back up for one more run, probably just because it needed to come further into the supply, but nonetheless, that's exactly where we should be entering. The start of the supply region, the imbalance fill, had a little bit of drawdown, but again, ended up rolling back over to the downside, created that lower low, stops moved to break even, partials taken. It's a good day. Okay, so start building these confluences. Don't enter just to enter. Don't get into the market just to be in the market. That's how people lose. That's how people blow their accounts. That's how you get frustrated. I know it's very difficult sometimes when you're first starting off trading, having that patience and waiting for all the confluences to align, but it's more profitable for you to do so over the long run. All right. So now, remember, where do we target? We target these equal lows here, and even lower, because we would expect a lower low to be formed. Okay. Now we got in here, we had a great reaction. Price started to chop, obviously stops to move to break even. Never leave good profit on the table, or make sure you take profit while you're in it. Okay, don't just leave it all the way until you take profit, because if you don't secure any partials along the way, the trade could be for nothing. Obviously, never secure all of it before the take profit, because you never want to leave a losing trade, or excuse me, leave a winning trade on the table. All right, so partials were taken. Unfortunately, it did come back up and hit us at break even, but nonetheless, it was still a good trade. The confluences were there, the entry was confirmed, the rules were met, and unfortunately, overall it didn't play out, but you can't ever prepare for stuff like this. You just have to go with what your rules are and what your entry criteria is. Confirmed, perfect, we made money, we didn't lose anything, stops moved to break even. Oh well, hit it at break even, we move on, and we go about our day. So guys, thank you so much for tuning in. I hope you guys took a lot of value from this. If you have any questions whatsoever, please feel free to DM us. I'm going to give you guys a little homework if you are interested in really making a difference in your trading and furthering your education here with us. Go on any pair, do some top down, use bar replay, and find setups like this. Don't cheat, but go find some setups like this with these same confluences. Look for accumulation, distribution, these areas of supply and demand, confirmations, counter trend breaks of structure. Go and do some bar replay, and then send me your results. If you guys have any questions whatsoever, I feel free to message us. We can talk about it. This is all free content. I have no problem communicating with you guys, even if you guys are not a part of our VIP service. You're more than welcome to message me with any questions. I'd be happy to help you, but go and practice this for yourself. The only way you're going to get better is if you practice it. All right, so thank you guys so much. If you're interested in learning more, feel free to shoot us a DM. We'll be happy to set you guys up with any educational material that we have, along with any further one-on-one content within our VIP service. We'll be happy to help mentor you as well to get you where you need to be. So thanks guys so much. Have a great rest of your day. Happy trading.